Welcome to the podcast. I'm Eric Salzman, joined by Richie Bennett and Kevin Doherty. And let's get right to it. Kevin, lots of exciting things happening in crypto.
Yeah, that's right. There's actually a bit of breaking news that is it's looks like a wild story. All the details aren't out yet, but there is a investigator. He's independent. He's actually anonymous. The guy who calls himself Zach XBT, and for years now, he has been really the main person uncovering crypto frauds and tracking the money trail, really investigating the blockchain to see the movement of tokens. And when there are thefts, frauds, he has been very, very successful at tracking down who the actual perpetrators are. And very, very highly respected guy. He's got dozens of pelts that he's nailed to the wall. And he has just come out and said that he's identified who is responsible for stealing $40 million worth of Bitcoin from the US government, which that's not someone you want to steal from. You know, go rob a bank, but don't rob Fort Knox. And so what he has gone public with is that he has tracked the theft of this Bitcoin. And he says the person behind it is the son of the president of the company that is handling the government's Bitcoin holdings, the Bitcoin wallet for the government. So, the holding Bitcoin, transferring Bitcoin, all this stuff is, not quite the the U.S. government employees are not experienced at something like this. So when
Kevin,
the yeah
can I just ask a question quick? So
yeah
the US government owns Bitcoin.
that's
Where
right.
does it own it? Who's like the
So most of it, well, all of it so far has come into their possession from criminal prosecutions. And so it's owned by like the Federal Marshal's Service is the entity that, when they have arrested people for engaging in frauds or thefts of Bitcoin, and the government takes possession of that Bitcoin, and it's the Marshal's Service that is the kind of the front line there. And so they contracted out to this company, who, let me get the name of this company. It's called,
Is it an American company?
it's an American company. It's one of these, Virginia swamp companies that
Yeah, yeah.
contracts to the federal government. This one's called Command Services and Support. So,
and
the
Don Jr. and Eric aren't involved somehow?
no, no, it's the person, the president of the company. His name is Dean DeGita. I've never heard of him. And so anyway, this investigator is claiming now that the son of Dean DeGita is the person that stole the Bitcoin. Now, the story gets even wilder. The way he tracked this kid down and this Bitcoin down is that in the criminal underworld, if you want to call it that, all these people who do these crypto thefts, identity thefts, et cetera, they have communities where they gather on the dark web online, and they share information, they share intelligence, they brag about their exploits.
Hmm.
And so in this instance, apparently what happened is this kid was, in one of these bragging sessions with another, ne'er-do-well from the crypto underworld, and bragging like, look at, I've stolen, these tens of $1 million worth of Bitcoin. And in these bragging sessions, the one thing you do is to prove you actually own this coin. You tell the person, hey, watch what I'm going to do. Here's a wallet address, which you can track on the blockchain online. And they'll say, watch, I'm going to send $2 million worth of Bitcoin to that address. And so that's what happened in this case, that this investigator got privy to this conversation and, listened in and watched and saw the addresses that were being used and
Hmm.
tracked the Bitcoin both back to the US government and to this kid who's the son of the president of this company that is handling the Bitcoin for the government. So this is, as I said, this is really breaking news. It just came out hours ago. It's not in any of the media yet, but I suspect this is going to be a pretty big story over the coming weeks. And of course, the crypto haters are going to love this and be all over this. And the Trump has talked about how he wants a Bitcoin reserve for the government. Well, the people who are opposed to that are going to love this story because the U.S. government's Bitcoin got stolen by some kid. So it's wild stuff.
Who wasn't the brightest criminal if you think about it?
No,
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 not at all. Now it sounds to me like this is easy if they want to like brush it under the rug. They'll just hit this kid up with all kinds of charges. The old man will probably be like, I told him he didn't.
I had no idea.
He didn't get his allowance this week, so maybe he was pissed and he grabbed 40 million.
Yeah, it'll be like someone whose wife works for the Southern District of New York and finds out about upcoming prosecutions against companies and goes out and shorts their shares in the market. The wife, I had no idea that my husband was doing this. It wasn't me, it was him. So yeah, it's gonna be interesting to see how this unfolds.
So they don't auction that off like when they grab speedboats and fancy cars from drug dealers. They don't auction that stuff off, huh?
Well, they had been selling it before, but now, of course, with the Trump administration saying they want to build up this Bitcoin reserve, they've said no more sales of seized Bitcoin. We're going to hold on to it, or any crypto for that matter. And so that's why they have this stockpile, but you got to hold on to it.
Yeah.
So
let's talk about what's happening to cryptos right now. Bitcoin is battling to stay around 88,000 right about now.
Yeah.
Looks like our rally I got all excited about is stalling.
Mm-hmm. At the same time, gold continues to surge higher. So you remember at the beginning of this year, we talked about one of the main themes we're going to be following this year is the idea and narrative of Bitcoin as digital gold. Is that still alive or not? Because for the last 6-8 months, gold has been on a tear and Bitcoin has gone the opposite direction. And all these institutional buyers that were stepping in and building positions in Bitcoin invariably would describe it as digital gold and as the reason why they were accumulating these positions. And the one thing that I track is the Bitcoin to gold ratio. Now, I don't use the price. What I use is the market cap. And so what is the value of Bitcoin outstanding? As of right now, it's about 1.8 trillion US dollars. That's the value of all the Bitcoin. The value of all of the gold in the world above ground, so gold bars, gold jewelry, et cetera, is $37 trillion right now. So that Bitcoin to gold ratio is right now 4.8%. So the value of all the outstanding Bitcoin versus the value of all the outstanding gold. That's down sharply. It reached a peak of about 11% a little over a year ago. So December 17th, 2024. Sorry, 2 years ago. No, that's a little over a year ago. So after the election, when Bitcoin had this big rally, it got to 11% of the value of gold. And the feeling amongst the Bitcoin bulls is that this ratio was only going to increase over time as the adoption of Bitcoin continued to increase, as institutional investors, sovereign wealth funds, et cetera, bought it. And also that this idea that as the economy everywhere becomes more and more digital, it makes sense to have a digital currency also become increasingly important. And so Bitcoin is something that can be used as the base financial layer of this new digital ecosystem makes more sense than, gold bars sitting in a vault somewhere. And so every single Bitcoin bull you find is convinced to the depth of their bones that the Bitcoin gold ratio is just going to keep climbing over time and get to 40, 50%. And 10 years from now, they'll be at parity. Well, it hasn't happened. And so this is something that we talked about again at the beginning of the year, said if Bitcoin is going to be considered digital gold, it really needs to, in the next 3 or 6 months, it's got to get that trend going in the right direction. And what it really does, frankly, is also raises the question, is Bitcoin a safe haven? Now, I think most people would agree that a lot of the gold buying by central banks and others, it's safe haven buying, or at least, rebalancing away from holding US treasuries and increasing holdings of gold. And if Bitcoin doesn't participate in that, it kind of raises the question that, well, maybe this whole safe haven idea is just wrong. And that that what Bitcoin is really more correlated to is liquidity and central bank suppression of interest rates. And we may still see that coming out of China and the US and other big economies this year. But that's something that right now, I wouldn't say the digital gold narrative is dead, but it's definitely on life support.
Mm-hmm. Are there significant shorts being built, Kevin?
No, there aren't. It's just, and that's one of the interesting dynamics, is that the amount of leverage in the system, both long and short, is pretty low historically. And so it's just that the interest in Bitcoin seems to be kind of right now, which goes against every survey data that you see. It goes against, as we've talked about, in the third quarter of last year, the big increase in buying was reported by institutions. So it's kind of a mystery what's going on, to be frank.
So to put my tinfoil conspiracy hat on, do you think, I was about to say this word and you said it, China, maybe India, maybe Russia, maybe they have told their central bankers, you can buy gold, you can buy silver, but that cat in DC loves this crypto, and no one, unless you want to be hung in public from any central bank in our countries, will ever buy crypto. So my question, I guess, is, do you know if China has, I know China has big holdings in gold. So, and India has huge, gold holdings. Do you think they're trying to move this ratio that you speak of to dispel, this rumor or this theory that crypto is digital gold?
I know that last year that some of the most connected families in China to the government were buying both gold and Bitcoin.
Okay.
And so maybe that stopped. I don't have any my information sources there are push and not pull. So I was privy to information last year, but I can't go out and pull that information, if you know what I mean.
Yeah.
It has to be people who provide it to me. If I make that inquiry, they definitely won't answer the question. If I just sit here and mum, then that information may come again. But yeah, it's clearly the central banks have been buying gold, and I don't think they've been buying Bitcoin. But again, that the people, the families of the central bank governor and deputy governor and all those people have been. All indications are that they have been. So, but again, that raises the question: why is it behaving this way? It's a mystery.
We could segue right into something else that is happening east of us in Japan. Or I guess I don't know if we're east or west, the Far East. Is that we've had last week the Japanese government bonds, we call them JGBs. for the last, 20 years have just been, interest rates of 50 basis points, 75 basis points, shorter stuff, 10 basis points. And it got to a point the Japanese were doing, the Bank of Japan was doing what we were doing, the same thing, quantitative easing, where they were buying trillions of dollars of JGBs, or billions, I'd say. Like there's about 7.5 trillion of JGBs outstanding, which isn't as big as our market, but I believe it's the third biggest market, after I think it's US, Italy, and then I think Japan, with regard to outstanding government debt. So what happened last week? Well, all of a sudden, Japan has been trying to spark inflation for the last, again, like over 2 decades, and now they got it. They've got inflation. The yen has been getting slammed, or up until very recently was getting slammed. And the Japanese central bank, the Bank of Japan, has been slowly raising rates. What happened last Tuesday was they did a bond auction, which is when you basically you have an auction for the bonds. You say, I've got 5 billion JGB 20 years, for the bid, and everybody comes in and puts their bids in, and then they get the bonds. And the auction was a disaster. Apparently, it would be classified as a failed auction. And with that, the Japanese long-dated bonds, the 20-year, the 30-year, the 40-year, just blew up. And it really kind of ripped its way over to the US too, and I believe is going to put a lot of pressure on our longer dated treasuries and mortgage-backed securities and things that the guys that have been selling have been, they call them the whales in Japan. Those are the pension funds and the life insurance companies. They own that very long part of the JGB curve, the 20, 30, and 40-year assets. Because those were yielding such a low amount, relatively low yield, and these are pension funds and insurance companies that have long-dated liabilities they've got to meet. The owning JGBs in and of themselves wasn't generating enough money for them to meet their liabilities. So what a lot of them have done is they basically buy U.S. Treasuries, and then they currency swap it back into yen. So they borrow dollars to buy the let's say a 10-year Treasury or a 30-year Treasury, and then they do what's called a cross currency swap, and they swap it back into yen. And that's been going on for a couple of decades too, and the Japanese are major buyers of U.S. Treasuries. Well, now a lot of those long-dated those pension funds and insurance companies are looking and saying, you know what, yields are starting to become attractive again in Japan. Well, guess what? They're going to start reversing that trend, and they're going to start buying JGBs and not buying as much with regards to U.S. Treasuries. I don't think they're going to. I'm not saying they're going to sell U.S. Treasuries, but they will. They could definitely allow them to run off and put more of their buying into long-dated Japanese Japanese government bonds. But one thing that has happened, this I think relates to Kevin's crypto, is that the yen, what's famously known as the yen carry trade, that is basically, we believe it's about a $450 billion trade, if you will. Kevin, you said, was that Mizuho came out?
Yeah, yeah. That's their estimate.
Yeah.
And it was much bigger. When there was the previous tantrum in the Japanese bond market, was it last summer or the summer before? Something like half of that carry trade was closed then. So this is, I guess, what's remaining.
Yeah. And what the yen carry trade is, because for years, the Japanese short-term interest rates were zero or very close to zero. I mean, the policy rates actually got negative, but rates where you could borrow money was a few basis points, very low. So what all the guys who use leverage, think about large macro hedge funds, they would come in and borrow in yen at very low rates. Then they would invest it into higher yielding assets. It could be U.S. stocks, it could be bonds, it could be Australian, it could be a lot of things that have higher yield. And one of those things we believe is crypto, right? Well, now that the Japanese central bank, the BOJ, is starting to raise interest rates, all of a sudden people are going, you know what, that the yen carry trade may be over, because now the differential between where I could borrow in Japan and then buy assets in the US is converging. And that trade, we believe, is starting to unwind, and that could be putting pressure on crypto as well.
Yeah,
I
and
think
it would be great if it is, because that would explain the conundrum.
Hmm.
yeah, and I think too, like for those of you who are watching and you feel like you can't do the yen carry trade, you probably can't, right? If you're JS Ragman, which we are, that that trade only works for like multi-million dollar positions, right? Like it would be great to figure out a way to bring, you know, that product to regular people. And eventually I'm sure it will happen, just like stocks became ETFs and what have you. But it's
Write it down
usually,
when the trade's falling apart.
yeah. Here, try this.
Here, retail.
And, you know, so you have, like Eric was saying, like these macro hedge funds. This is how these guys get to drive those fancy cars and those, you know, private jets. They are borrowing, as Eric said, when rates were very low in Japan, and you're basically making a big bet, leveraging yourself up, that those Japanese rates will stay low, right? That's been the case for years, years and years, like 30 years. And the minute that thing starts ticking up, now you got problems because it's so levered, meaning there's so many people doing this, and they don't have to put up a lot of money to do this. They do it in what Eric said, the currency swap market, which is not putting up money like you're buying a bond or a stock. That's notional value where you exchange interest rates on whatever you're borrowing in. And that thing can unwind, and we've seen it, you know, it happens not often, but when it happens, it crushes everything, like everything.
This is the proverbial picking up nickels in front of a steamroller.
Correct.
It's great, but you better not slip and fall down,
Right.
because that's
That steamroller keeps coming.
yeah, exactly.
Yeah, I mean, I think we saw it in '08, right? When the other way you see the unwinding of the trade is when all of a sudden the yen strengthens dramatically against the dollar, because
Right.
you got all of a sudden it's like, oh shit, I gotta pay back yen. I need it. So now they gotta buy it because essentially you're short yen when you're doing this trade. And I know we saw it in '08 where the yen really powered up against the dollar because of that. And like right now, there's a big thing going on with it because the yen had been weakening so substantially that we believe that a combined effort between U.S. Central or the Fed and the Ministry of Finance, I guess would be our Treasury and the Ministry of Finance, is actually intervening in the yen market because the yen was getting pounded. As that reverses out, and look, the Japanese are the Bank of Japan meets March. The next meeting is March. You know, and if they go another 25 basis points or 10 basis points, wherever they move, it could have a significant impact. And a lot of the reason why we talk about this is that a lot of people will be affected, whether it's your crypto, whether it's your stock portfolio, whether it's the bond fund that you're in, and you won't know why it's happening because no one really talks about this stuff until it starts blowing up. And we definitely have a potential for that, I think.
And yeah, I think too that you have a situation where, like, if you look at the big picture of both economies and both Ministry of Finance and Treasury, they want it to go that way, Japan and the US, right? Japan is looking to raise rates. US, obviously, every day from the White House to the Treasury Department is telling Powell and everybody else we need lower rates. So if those things come to fruition, it's going to blow up.
Mm-hmm.
It really will. Like it will. And, you know, so there's no panic yet because nothing's happened yet. But I saw a good thing. I was talking about this earlier today. Charlie Gasparino, he's New York Post writer, and he's also on Fox Business and stuff. He wrote an interesting article saying that this whole Greenland thing at Davos last week, they claim that it was fixed, if you will, because all the guys were in Davos and they sat down and Trump backed off and all that. And his argument, Gasparino's argument, because I think he knows Scott Bessent, he definitely knows the president. The 10-year Treasury the yields started climbing. And I think Bessent, who's the brains of the operation kind of, was like, hey, yeah, boss, you got to like stop this thing. Because if you're going to keep talking about tariffs, that 10-year note in yield is going to go higher. And all this stuff you're trying to do, like with the housing market, car loans, bringing the economy back, is going to get put on hold. Big, or bigly, as he likes to say. Mm-hmm. And then that was his premise was the bond market fixed Greenland for now.
Well, wasn't that a famous quote from Bill Clinton?
When it's in that article too. It's so awesome.
Yeah,
story where he's sitting there and Billy C is in that room and they're all sitting around and he goes, you mean to tell me my administration and what I've tried to do is going to be driven by a bunch of effing bond traders in New York City? And I think it was, I'm not sure who was.
It was Bob Rubin.
Bob Rubin, yeah, who was a former bond trader in New York. He goes, yes, Mr. President, that's correct. and apparently he just like stopped and went, okay.
Right. Well, if you remember when Clinton first started, they used to talk about, they had the pizza parties and they'd all sit around and it was, Robert Reich and they had all these great, progressive ideas they were going to do. And I think they came up with all this big spending plan. And then that's when Bob Rubin looked at it and goes, no, like those guys the bond desk is going to tell you what to do. And it ain't that.
And P.S. It's the last time the budget's been balanced in the United States.
Didn't he make a quote? He said, if I die and come back, I want to come back and be the bond market.
Yeah. So is the Japanese bond market, the implication is that it's driving the U.S. yields.
Oh yeah.
Right now. And so should all eyes be on Japan over the next few weeks and
months? Absolutely.
It needs, if it doesn't stabilize, that is no bueno. And if it does stabilize, then we might see, it would be, if the carry trade stops unwinding, that there are a lot of follow-on impacts from that.
Right. Yeah. I mean, I personally know one gigantic investor, and they're global macro. And when they saw, I think the 30-year got to it was like 3.9. It was, I know the 40-year got up to 4%, which is a massive increase from just for a few months ago. And they basically saw the opportunity they swapped out of treasuries and they went into JGBs. So you're also going to get those flows because it all has to do, and it's too complicated to get into here, whatever, too much in the weeds. But like Richie said, these cross-currency swaps, like they factor those in versus the yield you can get on a treasury versus the yield you get on a JGB and swap out the currency. And it's just like they hit a button, and if all of a sudden it becomes 5 basis points better to be in Japan and swap it back, then that's what they'll do. And that's really what they did at the end of the week last week. And that's why the Japanese yields were getting out of control. And all of a sudden they stopped going up and came back down quite a bit. And, the papers the media tries to figure out why it is. And they thought maybe it's because the new ministry of the finance minister came out and made all these nice comments in Davos. It wasn't it. It was the flows. Guys saw an opportunity to buy. But that should tell you that, there's going to be focus that has been so long on U.S. treasuries. I mean, that's a lot of money that can repatriate itself back into Japan. So, just one last thing about that is if you remember in 2022, something similar, but quote smaller, because the government bonds in the UK, United Kingdom, are called gilts, and the gilt market, GILT. And if you remember in 2022, when Liz Truss was the prime minister, I think for all of a couple of months, and she came out with this, which is a lot like Japan. They said, hey, we want to cut taxes and we want to spend a lot more. And the bond vigilante said, no, you're not. And they started selling gilts. And what happened was the same, you know, we talked about Japan with the pension funds and the insurance companies. Same thing in the UK, where they basically all of a sudden they were in a trade that they instead of cross doing what the Japanese do, which is buying other currencies, what they did is they went into these structures called liability driven investment pools. And BlackRock and all the big guys ran these things for them. And what it really was again, remember, if you're in an ultra low interest rate environment, but you're a pension fund and or you're an insurance company and you've got these long dated liabilities, you need to invest in assets that will grow to meet those liabilities. And so what they did is they said, well, you'll own gilts, and what we'll do is we'll rev it up. In other words, we'll use leverage. And what they did is they created synthetic gilts, which essentially were interest rate swaps, where they would receive a fixed payment and pay floating, which is the long-term rate is more than the short-term rate, so you're making what's called carry. You're net getting more money in than you're putting out. And then they also took their gilts and they borrowed against them in the repurchase market and bought more gilts. So they levered that whole thing up. And everything was margin. It was leverage, and it was daily margining. And when the gilt market started getting slammed, all of a sudden these guys started getting margin called, and the whole thing blew up. And the Bank of England had to come in 2022 and basically bail it out. They had to start coming in buying gilts just to stop the bleeding, and they stopped it. But it was traumatic, and the trust government was blown out. So I kind of thought that was going to happen in Japan because I really didn't know what the structure is there for those guys. But I guess it's not. They didn't go over their skis as much as the British pension funds in UK did. But again, that's another thing that nobody knows about it until it happens, and then a lot of bad things happen.
Well, maybe there is one practical bit of advice we could give our listeners. So if they're worried about this carry trade imploding, that would strengthen the yen, right? Because of the repatriation of assets. Maybe now is the time to take your bucket list trip to Japan, because the yen is cheap. I'm looking, it's the yen is basically the cheapest it's been in 40 years. So that your hotel and your sushi and all that's going to be a lot cheaper if you go now than it might be 6 months from now or a year from now.
That's probably the best advice we gave for this whole program.
And I think there's another little piece too, if you're paying attention to the financial news of the world, and you don't have to every day, but it's nice. I keep going back to Scott Bessent. Scott Bessent, prior to his career in government, was one of the big cats working for a guy named George Soros in his hedge fund.
I've heard of him.
Yes. And I bet a lot of our viewers have too. So he was something happened there, because we won't go into the gory details of maybe next time of what Scott Bessent said about Gavin Newsom and George Soros' son. But he worked for him. He was his guy. So as those leveraged yen trades go, there may have been no one on earth bigger than Scott Bessent executing those trades on behalf of the Soros hedge fund. So he knows that trade very, very well. Might have helped invent it. I don't know. But he will know the current players in that market, old hedge fund buddies of his, maybe old people at his old firm. And he will know if he makes that call and says, hey, is this thing really unwinding right now? He will get the info, and that will trigger things to the big man in the White House, because he will know. He will say, like, this is about to happen, dude, and you have to say this, or, and I think Big Don will listen, because I think he likes the fact that his guy is an insider. That's how he thinks, right?
Right.
But yes, he will. So any words out of Scott Bessent over the next, couple of weeks, pay attention to, please.
Okay. Well, guys, should we finish up with Richie? Let's talk about we won't do the Super Bowl pick yet.
No, we got time.
That one's a no-brainer. So Seattle, no matter what the point spread is.
So Kevin, you'll enjoy this. I wore my New York Jets shirt out yesterday, and the Patriot fans for the first game were like, "Ah, you stink, dude! Like what? Like you just hate the Pats." And I said, "This has nothing to do with you." And they were all like, "What?" And I said, "The second game is the Seattle Seahawks, and not only on the offensive side, their leader is a guy named Sam Darnold, but on the defensive side, there's a fellow named Williams, who is a wall on the defensive line. Those two guys were teammates on the 2018 or 19 Jets team, and apparently they weren't good enough because the Jets are so good that they let them both go. And now they're the leaders of the current favorites in the Super Bowl, which
the Pats are favorites? Oh, no, I'm sorry. The Seahawks. Sorry.
yeah. So I'm like, I will be wearing my Jets jersey on Super Bowl Sunday as well. That's where I stand. So yeah, I had told you guys we're recording this on the Monday after the Sunday championship games, but I went on record saying I bet the Denver Broncos plus the points and the under in the Seattle Rams game. So I split 1-1. I had no idea that I'm happy, but I had no idea that Sam Darnold would play maybe his best game of his life in the first game of his life, which is pretty cool. But yeah, we'll have more to report going forward on Super Bowl as it comes. I think the line opened up. Seattle's favored by 4.5, and I think the over/under is 46-ish, which is interesting.
Should be a good game. It's as a Seahawks fan, I would rather they had played the Broncos, but I would rather they beat the Patriots.
Yes, because of the bitterness.
Just saying, as yesterday, I would much rather they had played the Bears. I would have felt more calm about that. But definitely you want to beat the Rams because that's the rival. And obviously there's, at least amongst the fans, the players don't give a shit about any of the history, but the fans of the Seahawks certainly remember what happened a decade ago in the Super Bowl when they faced the Patriots. And so
it's funny, right? Like the last two times the Seahawks have been were against the Pats and Denver.
That's right.
They buried Denver in New York that year.
I was there.
You were.
I was.
All right, guys. Good stuff. Let's stay warm here on the East Coast. I'm digging out of my snow and ice. Richie's sweating down in Florida. What's happening in Berlin?
It snowed today, and it's hovering around zero. It's snowed. We got a couple inches. It's been a cold winter. We're actually going on a family vacation in a week to Iceland, and Iceland has no snow on the ground, and it's 7 degrees Celsius. So but Berlin it's a cold one.
All right. Okay, guys. See you next week.
See ya.
See ya.